what would be the strategy for the bear market?
Welcome to Barry's Bites. Please join our host, attorney and financial advisor Chris Barry.
What are the opportunities right now? And that's really what I like to focus on, because we can't control the market. We can't control events. We can only control our reactions to these events. So yeah, seeing the market down 16%, it's not a good thing by any means. No one likes to see the red. But what are the opportunities? What are the things that maybe we should be considering? And one of those things, I think you're kind of touching upon this, is now might be the time, especially if you have IRAs or pre-tax accounts. Like, let's say we have XYZ mutual funds inside of your IRA, okay? And let's say it just dropped 15%. A simple strategy might be because again, most people think taxes are going up in the future. Think of it like a slinky, right? Those old slinkies. We stretch it out, it's in the IRA. Okay, now the market drops and now it's shrunk. Well, now might be an opportune time to do something like a Roth conversion. Don't like to get it into timing the market too much, but this is something that we just did with one of our clients, a Roth conversion, where now if we say, okay, now this money is inside of a Roth that can grow tax-free, and we still have that same XYZ mutual fund, or I would say even maybe invest more aggressively, as things rebound, which they always do, now we can get that rebound inside of the tax-free bucket. Similarly, if you had an asset protection trust, like a Castle Trust, and I was meeting with a client right before the webinar, has about 1.1 million pre-tax, near retirement age, and concerned about long-term care costs. Well, now with this dip, gives us more room. Again, if it's like assuming XYZ mutual fund drops 15% now, well, let's move XYZ mutual fund into the trust, pay the tax, and now we can get the growth inside of this asset protection trust. That's probably the biggest thing, where we're looking at what can we control. Taxes are one of those things that we can get some control and make some decisions in terms of what else to do in the bear market. So that would be kind of strategy number one to think about. Number two would be consider the amount of risk you're really willing to take on. Now might be a time to reassess. And I'm not saying that you should go to cash or anything like that, but when I talk to clients, a lot of times they say, oh, I'm aggressive. It's easy to be aggressive when we've been on a 13-year bull run. But now we see, okay, what can happen? The markets can drop. So maybe now you're not really as aggressive as you thought you were. And I'm not saying you should move to cash or anything, or I'm not even suggesting you should move more conservative, but I would just reanalyze how much risk you're really willing to take on. So that would be a second thing to think about. And then the third thing to think about is repositioning your assets into maybe safety or growth. This is where sometimes we're repositioning assets still inside of like an IRA or a brokerage account, repositioning those assets so that we can have our principal protected, but still maybe get a 20% rate of return. So there's things that offer safety and growth. So maybe we want to think about moving more money to safety growth versus the volatility of the market, where still, yeah, we can collect the upside of the market, but maybe we want to limit our downside exposure moving forward and still have a good rate of return there. Here we go, fourth thing. And I'll tell you what, it's hard. And again, most people are expecting a lot of volatility for the rest of the year. So it might be hard to stomach this, but maybe now's a time, because everything is low, is to buy. Maybe we get more aggressive in the market. So, okay, we had a dip. We know there's going to be volatility, but let's ramp up the risk now, assuming you're willing to deal with the ups and downs, with the idea that, hey, now's the time to buy because everything just dipped. Hopefully that answered your question, give you some things to think about. But yeah, Roth conversions, moving money out of the IRA, thinking of it kind of like a slinky where it just shrank. Well, now let's move it out and move it and have that growth somewhere else, whether it's asset protected in a trust or maybe a Roth, something like that. Second, consider the amount of risk you're really willing to take on. Maybe it's time to reevaluate that. Third, maybe you could reposition some of the assets from the volatility of the market to something that offers safety plus growth. And then fourth, maybe now's the time to lean in and get a more aggressive, or if you have money sitting on the sideline in cash, maybe now's the time, depending on your situation, to move it into the market and collect, hopefully, some of the upside. But again, I think for the rest of the year, we're going to see continued volatility. So if you're risk averse, that might not be the strategy to do.